Hello and welcome to April 2025 Tactical Portfolio Update. I'm Michael LeBlanc, bringing you the latest on how we are navigating the global markets in a month marked by significant volatility, primarily driven by the escalating trade tensions and economic uncertainties. Let's just jump right into it. April began with a pretty big jolt as President Trump Liberation Day tariffs were announced on April 2nd, imposing a 10% levy on all imports with additional tariffs targeting specific countries. We saw the charts, we saw the release and kind of how that went. The immediate market reaction was pretty severe. The Dow Jones plunged over 1,600 points. And the S&P dropping more than 3% in a single day. We saw continued drops after that until eventually we saw the tariffs being paused when the administration in the U.S. got nervous when the bond market started to pull back pretty sharply as they were looking to renegotiate about $7 trillion in U.S. debt. That triggered a sharp recovery in the markets, but volatility continued on a day-by-day basis, basically. Despite this initial shock and kind of start to the month, the market showed pretty good resilience. S&P managed to recover, ending just down 0.8% for the month. The NASDAQ actually rallied up to 0.9% positive for the month, mostly fueled by strong performance in the technology sector, but with some extreme volatility. So, there's a lot of panic happening on the pullbacks. And then, some great rally days around that as we saw a temporary pause in certain tariffs and some relief in certain tariffs, especially around some electronic goods. And so we look broader out in the economies. The Canadian and U.S. experience a contraction in GDP for the first quarter. This is the first decline in 3 years. We did see, though, the labor market holding in. Inflationary pressures persisted, indicating some modest growth maybe down the pipeline. But the prices paid index surged to its highest since 2023, reflected mounting input cost pressures. So we're going to have to keep a really close eye on inflation this year. I know it sounds like 2022 all over again. But inflation is going to play a big role when we look, especially into the U.S. If we do see a slowing economy, rise in inflation, and the U.S. Fed not able to cut rates. And in fact, if we look out in April, the U.S. Fed did not cut rates. They kept the benchmark rate, and so did the Central Bank of Canada. Both held rates for the month. And this is mostly around the uncertainty. They both cited, the need for more clarity around this volatility and economic landscape. While previous predictions indicated potential rate cuts in 2025, those are now, in doubt as policymakers are trying to navigate this new reality that we're living in, especially around world trade and inflation. Excuse me. Canada's economy faced some significant challenges. The service sector contracted for the fifth consecutive month, pretty much showing widespread economic weakness. We have been tracking that since, November, December. We do expect, Canada to slip into a recession, whether it'll be a mild recession temporarily, briefly. That's kind of what we're hoping for at this point. But these trades and tariffs are kind of putting some doubt as to how hard we will be hit and how long that will last. A lot of it is going to be around how quickly we can replace the U.S. trade drops with other countries. Canada's already in talks with Mexico, China, Europe to set up new significant trade partners around the world, and also the new Canadian government. Obviously politically, we're heading into a little bit of uncertainty with a new Liberal minority in power after our election. How are they going to be able to negotiate with the US and manage those trades? But also what we're going to do locally to make our trade future stronger with other countries, and also potentially a lot of investment into infrastructure, ports, pipelines, just to have the east-west trade happening instead of just focusing on south trade. So what's been going on in the portfolios through all this? Well, we've been fairly active through April. At the beginning of the month, we took advantage and did place some cash into some existing names in the portfolios that had pulled back. Remember, we went into the month with about 20% in cash, or just around 20% in cash, depending on which risk profile you were in. And later on in the month, when we saw those rallies in the market and the portfolio spring back again, we actually raised. So we're actually, just above 20% on average across the risk profiles. So we're actually higher cash at the end of April than at the beginning, but we did spend some out there and bring it back again. We trimmed out some positions through the month as we saw the recovery, because again, we do expect more volatility to follow into May and June. And despite that quick recovery, we do see that global trade really hasn't settled. We haven't seen the real impact of those tariffs, or even the threat of those tariffs to the supply chain. There's more and more talks about, canceled orders leaving the U.S., but also, talking about the empty cargo ships, or the lack of cargo ships heading into the U.S. as, countries are just dialing back the supply chain with the threat of was just the threat of tariffs, right? It's created this uncertainty around the world where people can't rely on, or suppliers can't rely on what their goods are going to cost when they land in the United States. So there's talks about empty shelves in the U.S. There's talked about not having toys on the shelves in the U.S. for Christmas, and a lot of other supply chain issues that we're going to have to keep a really close eye on. And we haven't seen the effect of pricing. We've just started to see some people start to realize the real impact of tariffs. A popular shopping site called Temu, if you're not familiar with it, where kind of like the Amazon of China, and they've just added a new line to when you buy goods. If you're in the United States, you go to buy goods. It shows you the cost of those cheap goods, or traditionally cheap goods, with a new line showing the tariff, so the import fees. And in a lot of cases, it's over 100% of the cost of the goods. So that's just starting to happen. Amazon hinted that they were going to do the same, but pulled back after some pressure from the White House. So they're not going ahead with those. But obviously, that's going to be built into Amazon prices in the United States, not in Canada, because we're not in a trade war with other countries right now. So keep in mind, though, in the portfolio, we do focus on companies with strong cash flows, and are designed to weather these difficult economic periods. And we do see challenging times ahead. That doesn't mean we see big negativity for the portfolios. In fact, whenever we see volatility in the markets, it's actually a pretty good opportunity, especially where the portfolios are currently positioned with some strong cash allocations, that we can take advantage of any of those pullbacks. So as we move into May, the markets remain on edge. We're closely monitoring the developments in global trade policies, inflation trends, and those central banks. Those are going to be the key themes through the summer as we try to figure out where everything's going to land. We did see some pretty good resilience in April, which suggests some cautious optimism for the summer. But the path ahead is certainly carrying some volatility with it. So stay tuned for our next update. Well, we'll take a deeper dive into these factors and continue to see how they shape out the global landscape. Until then, stay informed. Remember to always be very diligent in your portfolios when it comes to your trade discipline, whether it's buying or taking profits. Trim is important in portfolios. We do it all the time to make sure we don't get overexposed. So with that, thank you for joining us this month. For any detailed analysis or updates, visit our website, give us a call, follow us on social media, drop an email, whatever's easiest for you. Remember, the information we cover in here is for educational purposes only. It's not financial advice. Always reach out. We're happy to answer any questions specific to your situation before you make any investment decisions or adjust any of your financial plans. So with that, next time, and we'll talk to you again soon. Thanks very much.